Alright, welcome back to a brand new video for the Trading Roadmap series. This one will be about conditions, and this is, as always, something really important and something that you guys pretty much need to know. Alright, so right here, I have 4 different criteria. The first one being when not to trade. There are specific days that you guys just should not be taking trades because with the way that the market works, most of the days you want to be keeping your profits, and that is one really key part about trading where it's like you want to keep your profits and not lose them. And that's how you make your money. You make money by just simply not losing it. You know what I'm saying? It's better to just not make any money that day, secure profits, than to force something. So in this example here, if a day is choppy, I'm not going to tell you once like a specific day to not trade, like be like, oh, any CPI day you can't trade. Like every day you should be open to trading. That's the way I trade, but it doesn't mean that you have to take a trade. It just means that you should be open. If a day is making no move and we're already into like 10-15, usually I'm just going to step out that day. If it's choppy, if it's making no move by like later on into the day, like obviously I trade New York AM session, around the like 10 a.m. mark for prices to start distributing. If it just chops around the whole day on both indexes and there's no move being made, then I might want to step out from that one. And then the same goes for the opposite, which is when the move has been made early on and like you didn't catch it. All of your daily draw and liquidities have been taken out and swept out, and you didn't have a chance to catch it. It's okay. But don't force a setup trying to catch it just to get liquidated out because the move already happened. I'd say these 3 are probably the most important. Yeah, because from there's not really much. Like bank holidays, like this is pretty, like it makes sense. And then the last one that I have that people will not tell you a lot is simply when you're not feeling well. Like if you're, and I'm just talking about being sick and stuff, but it's like if you are not in your best mood, right? Something bad has happened to you. Or, for example, you've made a lot of money and you want to slow down, you don't want to get greedy, you don't want to put risk on the table that day. You can just observe the markets and not trade, which like is something that you guys should be doing. It's taking a break. Like not every day you have energy and the mind capabilities to take the best setup. If you got trash sleep, just don't force it. You can just sleep in. Like you don't want to do that every day, but if you are not in your best present self, then you shouldn't be putting risk on the markets because then you're going to get even more mad at yourself because you're most likely going to lose that money as well. And then lastly, I have, this other one thing. It is a little bit specific. So this one is like when the index pairs that you trade are making many divergences, like SMT divergences, which essentially means that they're moving in different directions. Like if NQ is going up a lot and then ES is going down a lot, it's not that you can't trade that day specifically, but it's like those aren't conditions that you should be trading. Wait for them to like rebalance out and then figure out like what direction makes more sense to you. And then if you see a proper setup, take it. All right, so moving on to the next one is when to trade. So the first thing is going to be when there is decent amount of news. The good spot that you want to be in is like when there's some light red news, when there's just like medium news, right? Whether it be like orange news at 10, some red news at 10, or maybe you have, for example, unemployment claims, red news at 8:30, something light, something not too crazy that caused a big shift in the markets, and like, a good amount of news to move the markets. The second one is going to be when you have a clear bias. So like days where you come in the markets and you're like, hey, like all-time highs got swept or whatever, and then there's a lot of low resistance liquidity to the downside. Like I have a very clear bias for this day. I've seen this play out before. I don't want to miss out on today. That's a day where you honestly should not sell. Basically, like you should be able to win that day. Those are the best days for you guys to like be taking trades. So when like in your head, just instinctively, you're like, I know I should win today, like win, you know what I'm saying? Like take a trade, those are probably good market conditions because you've seen them before and all that. Now for the last one that I have to say for when to trade is going to be when you don't feel guilty after entering. What I mean by this is like, feel guilty after entering. What I mean by this is like you want to ask yourself before you get in the trade, if this loses or if this wins, will I be mad at myself? If you will feel good putting this in your journal later, you should be taking it. If you don't, then the opposite. You should not take it. And you have to be real with yourself and answer this question. Now, for the next one, when to be cautious. For this one, I would say high impact news days. This is, for example, CPI, NFP. You've probably heard this stuff a lot. FOMC. So these are like really high impact news days. Like they're red days that cause big shifts in the markets. Sometimes they don't, but often they do. CPI, NFP, FOMC, when Powell's talking and when Trump is talking, right? Because these are leaders who have a lot of influence on the markets and the direction that it moves. I'm not telling you don't trade, because this stuff happens all the time. I'm telling you, trade and be cautious. You have to understand, when there's this much liquidity in the market, it's especially designed to take it away from you. So try to take good setups that would probably end up winning you. Now, this is the last thing that I have to say, and it's a little bit different from this stuff. So this video is about conditions, and I told you all the times about trading. Now I'm gonna tell you specifically, go into the charts and show you what I do every day in my pre-market analysis. So what I mean by pre-market analysis is you want to be looking at the chart before the market opens on the higher time frames and on the lower time frames, basically every time frame. And you want to be setting conditions for yourself, basically predicting what price is going to do and how you're going to react off of that. So I'll give you an example. The 4-hour time frame had inversed this fair value gap. It was in a bullish uptrend. So the 4-hour is bullish. The 1-hour is also bullish. We have a lot of low resistance liquidity to the downside, and then we have this one key swing high up here. When I go in the market open, you want to take this tool right here, or you do it in your head. But basically, you take the path tool right here, this one here, you go in this, then you click path, and so this tool, you just mark out what you think is gonna happen. So like today, what I had was, I think that either price might go up a little bit here, sweep out these highs, and then give me sharp legs lower. I catch a retrace, and then I take it lower all the way till down there. Or the second option would just be for price to basically go up, maybe come down and give me a little retracement into one of my P arrays, low time frame P arrays, and then push up higher onto this fair value gap. I was mainly looking at shorts today, but the way NQ was looking, like it was so bullish basically. Like you see right here, these are like Asian highs, you know, whatever, relative equal highs, this liquidity point. Because price action went so aggressively high and took out all of that, it lacked signs of reversals. I didn't see anything, so then I couldn't have taken a trade. Pretty simple. Those are the two that I made for today, but basically it's like whether you want price to come down, maybe could have had this, maybe price opens here, you want it to come down, fill this 4-hour fair value gap, and then you want it to push up higher there. Like there's so many possibilities of what price could actually do that basically you're doing this to set yourself up for if stuff happens. Now, usually when I make conditions, I make multiple of them and one of them happens. None of them happen, then I'm just not taking trades those days. But basically it's saying that like I'm already 2 steps ahead of the market and I know what will happen before it's even happened, and I will just react accordingly. So that will be it for this video today. I would just like to add to this in the link and in this video and in my description is my WAP, where you will find my Discord. And basically in that, if you guys want to join, I do live calls with you guys. And then any questions that you have that are really specific to your own trading, whether it be psychology, whether it be reviewing your trades, literally anything. We have backtesting sessions, we have charting sessions, and then obviously live trading sessions every single day. And another thing that I do every single day is I will give you guys my market outlook for the day, which is my daily bias. And in that, I'll show you guys everything that I have on my charts marked out, my conditions, and explaining each condition specifically. So if you guys want to join it, go ahead. I'm doing it to help you guys. You don't have to join. If you're serious, go for it. If not, just keep watching these free YouTube videos. They give you a lot of free sauce. But anyway, thank you guys for watching this video. I will see you guys in the next one. I'm out.